Thank you all for participating today. I have a daughter who's now 27 years old, and when she was about 5, one day she went to the supermarket with her mom, and it was a Saturday on a really, really busy holiday weekend, and the store was absolutely jam-packed with people. And her mother said to her, "Oh, Nora, I get agoraphobic in places like this, and if you don't remember your diagnostic and statistical manual diagnoses, agoraphobia is fear of being in public places." But of course, my 5-year-old didn't know that. She just knew that her mom was in some sort of distress and she wanted to support her. And so she said, "Yeah, Mommy, I get agoraphobic too. And if I can find it, I also get ice cream." I've learned a lot from my daughter about making lemonade out of lemons. And in this case, the lemon is that a variety of public benefits, including SSI, have not only limits on income, but limits on what they usually refer to as resources, another term for assets, savings, that sort of thing. And these programs can therefore limit the amount a person can save, particularly for the future, for emergencies, for retirement, etc. But that's the lemon. The lemonade here is that there are some ways that people can save money without having the savings count against those resource limits. There are ways that people can save substantial amounts of money and still be eligible for SSI and other benefits. And the newest one, it's not that new anymore. It's almost 4 years old now since the first accounts became available in Ohio. This method is called ABLE accounts, and that'll be our topic today. So in addition to SSI, most ways that people get Medi-Cal also have resource limits. Also, the CalWORKs program, that's California's term for temporary assistance to needy families. That's the need-based program that provides cash benefits for families with low incomes who have children. So these benefits and some others do have limits on savings, on resources. And the limits, particularly for SSI and the Medi-Cal that comes along with SSI, are really quite low, only $2,000. For CalWORKs, it's a bit higher. The resource limit is $10,000. And if at least one person who's age 60 or older is living in the home, the resource limit goes up to $15,000. But nonetheless, if you're looking at savings for an individual or a family, hoping to look ahead toward retirement, being able to deal with emergency needs as they arise, etc., this isn't a lot of money. And if a person saves more than the resource limit, what happens is their benefits stop. Not necessarily permanently. For example, in the case of SSI and the Medi-Cal that comes with SSI, if a person goes over the resource limit, they won't be eligible, but their benefit will only be suspended, not terminated. And suspended sounds a lot less threatening than terminated, and that's because it is. Your benefit can be suspended for up to 12 consecutive months without being terminated. And that means if, let's say, you go over the resource limit for SSI for 11 months, and then you realize, oh no, my bank account has more than $2,000 in it, I better spend some of it and get the difference down, the balance down below 2,000, then you can get your SSI back just by contacting Social Security. You don't have to reapply and start over. So that's good. But the bad news is you'd lose your full SSI cash benefit in each month that your resource balance went over the limit of 2,000, and your Medi-Cal would stop as well. So it makes it difficult if somebody wants to save for emergencies, for major expenses like buying a vehicle or paying for education, or retirement. So the answer is that there are some types of savings and assets that don't count against the resource limits for these programs. For any need-based, financially need-based program that is federally funded or partially federally funded, they do not count the home that you live in. You could live in $1 million house, and I realize that those are common in California now, and own it free and clear with no mortgage. And as long as you live in it, it does not count against the resource limit. You would still get those benefits. For SSI and the Medi-Cal that comes along with SSI in particular, you can have a car, and the value of that car won't be counted against the $2,000 resource limit either. There are some burial funds that don't count against the limit, variety of others. One that I'll mention that I didn't include in the PowerPoint, but I'll probably refer to it periodically, is special needs trusts. These are special accounts that are created to benefit a person with a disability, but they don't count as resources for the person with the disability because they don't technically own the money that's in the account. The money that's in the account is owned by this legal entity known as the trust. Also, the individual can't withdraw money from the account directly. Another person who's appointed as the trustee, who could be a family member, a friend, a financial advisor, an attorney, that's the only person who can withdraw money from the trust. And the money that's withdrawn from the trust can only be used to benefit the person with the disability. So the person with a disability gets the benefit of the money in the trust, but it doesn't count as a resource to them because they don't have direct access to it and it doesn't technically belong to them. So for decades, special needs trusts were really about the only way that you could save money and not have it count against the resource limits for benefits like SSI and Medi-Cal. The problem with special needs trusts is that they typically cost a substantial amount of money, thousands of dollars to establish, and typically they also cost money to manage each year. So it tends to not be worth it to use a special needs trust to save money unless you're talking about a substantial amount of money, because it's going to cost thousands of dollars to create and manage the special needs trust. They do still have their place, and I'll mention that once or twice during the presentation. But our focus today is on ABLE accounts, which were made possible by a federal law that was one of the rare examples of bipartisanship during the 2014 Congress. And the bill was signed by then President Obama in December of 2014, and it enabled states to create programs that would offer ABLE accounts to people with disabilities. Ohio was the first state to create ABLE accounts. That was in June of 2016, and there are now over 40 states that offer ABLE programs to let people open ABLE accounts. So an ABLE account is a special account that is owned by a person with a disability. It's typically managed by the person with a disability if they're capable of managing the money themselves. We'll talk about what happens if they're not capable of managing money in a moment. And basically, the money that's in the ABLE account does not count against the resource limit for benefits the person receives, like SSI, Medi-Cal, and CalWORKS. So specifically for SSI, the first $100,000 that a person saves in an ABLE account does not count against the $2,000 resource limit for SSI. So instead of a person being limited to saving just under $2,000, they could save just under $102,000 because the first $100,000 in their ABLE account would not count as a resource at all. The same is true for the Medi-Cal that comes along with SSI. For anyone who's not familiar with this, in most states, including California, if a person gets SSI, they are automatically and immediately eligible for Medicaid, which is a very important medical benefit, especially for people with disabilities, because it pays for not only medical and healthcare expenses, but for many people, it also pays for support services that people need to live in the community. And in the state of California, the Medicaid program is known as Medi-Cal. So for Medi-Cal that comes along with SSI, again, the first $100,000 in an ABLE account doesn't count against the $2,000 resource limit. For CalWORKS, none of the money in an ABLE account counts against the $10,000 or $15,000 resource limit. So a person could have even more than $100,000 in their ABLE account, and it wouldn't affect their eligibility for CalWORKS. So who is eligible to own an ABLE account? A person has to have a severe disability, and their disability had to have started before they turned 26 years old. That the fact that the disability had to start before age 26 was a bit of a compromise when the ABLE Act, the federal law that made ABLE account programs possible, was passed. It was a nod to limit the cost of the program by saying, well, we're not going to open it up to anyone with a severe disability, only people who became disabled at a fairly young age. However, there is a bill that's being reviewed by the Congress, it's under consideration, that would raise that age limit from 26 to 46. So if it passed and the president signed it, that would mean anyone who acquired a severe disability before age 46 could be eligible to open an ABLE account. But currently, and since the act was passed in 2014, the age limit has been 26. So a person had to have acquired a severe disability before age 26 in order to qualify for an ABLE account. Now, if you get SSI benefits or Social Security disability benefits, that proves that your disability is severe enough to own an ABLE account. If you don't get SSI or Social Security disability, you may still qualify, but you'd have to have some evidence that you'd be prepared to provide on request to the IRS if they ever audited you that verifies that you do have a severe disability. Now, it's a very important point. Some people get confused about this. I noted here that your disability, your severe disability, has to have begun before you turned 26 years old. But you could open your ABLE account at any age, even long after you were 26 years old. So it's the disability that has to have started before age 26. The ABLE account could be opened much later, as long as your disability started before age 26 and you have evidence of that. Now, who can put money into an ABLE account? Who can make deposits? Well, the most obvious person is the person with the disability who owns the account. And people do frequently contribute savings to their own ABLE accounts, but also family members, friends, organizations, even strangers. There are some ABLE account programs which, if you go to their websites, enable people to open sort of an equivalent to a GoFundMe account, where they just ask strangers or anyone to contribute to their ABLE accounts. Not sure how many contributions they get that way, but basically anyone can contribute to an ABLE account. There is a limit on total contributions to an ABLE account. The ordinary limit, and we're just going to finish this slide and then I'll break for questions if there are any. The basic limit on contributions per year is $15,000. This means if you have an ABLE account, all contributions from yourself and anyone else, any other source, cannot exceed $15,000 in a calendar year. But there is an exception. Let's say a person's ABLE account has received the full $15,000 in contributions in one calendar year, but they'd like to contribute more. Under two conditions, a person can contribute more. If only the account owner, if only the person with a disability who owns the account contributes extra, and that person is working, and the extra amount they contribute over and above the $15,000 limit comes only out of their earnings, out of their wages or self-employment income. In that case, they can contribute more so that their account could receive total contributions of over the usual $15,000 a year limit. In fact, that person has significant earnings and they want to contribute a lot of them to their ABLE account. They can contribute over $12,000 a year of their earnings, over and above the usual $15,000 a year limit. If you'd like to know the precise amount, it's actually $12,760 a year, in addition to the usual $15,000 limit, which means the person could potentially have contributions of over $27,000 in a year in their ABLE account. Okay. In addition to a limit on annual contributions, there's also a limit on each ABLE account for total contributions in a lifetime, over the entire period that the ABLE account is open. And the limit differs from one state to the next. California has a fairly generous lifetime limit, and that's $529,000. So that means if you open your ABLE account in California, it's known as the CalABLE program, during your lifetime, during the entire time you have an ABLE account, the total deposits from all sources cannot exceed $529,000. That doesn't mean that your balance that you just have to keep your balance under 529,000. That means all the money ever contributed to your ABLE account can't exceed 529,000. Even if your balance is well below that because you've spent some of the money. Okay, so there's an annual contribution limit and a lifetime contribution limit. Pam, do we have any questions so far?
I don't see any, but we can ask for some. If anyone has a question right now, feel free to type it in the chat box and we will be sure to address it. I'm going to keep my eye on the chat box for a minute. You want to keep going, Michael, and I'll just keep my eye on the chat box? Okay.
Yeah, I'll keep on going then.
Great.
All right. So this is really important. Who controls the money in an ABLE account? It's usually the person with a disability who owns the account. If that person is capable of managing the money, they would not only own the account, but they would manage the money in it as well. This is a big contrast to those special needs trusts I mentioned a little while ago, where the person with a disability does not own the money in the account and they don't control it. They can't withdraw from it. Only the trustee can. This is an advantage for ABLE accounts in that the account owner owns the money and they can control the money. And still, the money will not count as a resource up to certain limits for those programs like SSI and Medi-Cal.
Michael, we have a question here.
Sure, go ahead, Pam.
Someone is asking, does it matter the source of the contribution, where the contribution is coming from?
It does not. I'm assuming that the person might be referring to the annual and lifetime contribution limits, and those limits are based on total contributions from all sources, not just the contributions made by the person with the disability. Now, if the question relates to this slide about who controls the money in the ABLE account, the person with a disability, if they're capable of managing the money, would control all of the money that's been deposited into the ABLE account, not only the money that the person with a disability, deposited, but the money that any other person, their family, an organization, a stranger, may have contributed. Person with a disability owns and controls all of that money. Now, if the account owner can't manage money, in that case, another person can have what's known as signature authority. That means they have the right to sign off on making withdrawals from a person's ABLE account and perhaps moving money around. We'll talk about investment options for ABLE accounts a little later.
Michael,
yes.
Sorry to interrupt you, but I'm hearing that people are unable to see your screen, that it's black. They're not seeing the presentation.
Okay.
So I'm wondering if maybe we need to try to reshare. Thank you for letting us know, folks.
Yeah.
Because this is a great presentation. We want to make sure people can see it.
Okay. Let me try this again. Okay, is the screen visible now?
Yes, we see your video. We see you.
Okay, and can you see the PowerPoint?
No, we're not able to see the PowerPoint.
Okay, let me try this again. Okay, I have to, I'm closing out the PowerPoint and reopening it. So bear with me just a moment. And was the PowerPoint visible up until people started to report?
I could see it.
Okay.
I could see it, but we had a number of attendees who said they can't see it. Yeah, people are typing in the box that they can't see it.
Okay. All right. Me back in here.
Worst case scenario, if I'm able to screen share, I can, I think I have your presentation. Okay, so people are saying they could not see it.
At all. Wow.
Let me see if I can. Hold on a second.
Okay, is it visible now?
Sorry, folks. Please bear with us.
Is it visible now?
No, I'm still not seeing it.
No. Sorry, it's saying that it's sharing on my screen, but
it's sharing your video.
Yeah, I mean, I've chosen sharing my screen. So, are you able to share your screen, Pam?
Yeah, let me see, and I can just forward your presentation. I've got it. Let me just cue it here. Thank you for your patience, folks. Technology is great when it works.
Yeah.
Okay.
Should I stop sharing my screen then, Pam?
Maybe stop sharing and then try to share again and see if that does it. And if that doesn't work, then I will cue the presentation and just advance it for you.
Right.
Because right now we just see your, okay, now it says your screen sharing.
Okay. And is it showing?
Are folks seeing, are people seeing it now? The first slide? Yes. Some people are saying yes.
Is there anyone who can't see it?
Okay, people are saying yes, they can see it. So it could be, I'm wondering if some people still aren't seeing it, if it will show up shortly. That's so strange. Some people are, I'm wondering if,
has anyone indicated they can't?
Okay, people are saying that they can see it now. Okay.
Okay, great.
So if anybody is unable to see it, you might want to try logging out and then logging back in. And since we are recording this and all the webinars, we will have the presentations available and uploaded to the project page after the webinar, but hopefully everybody can see it now. I'm seeing that folks are typing in the box. So, okay. Thank you for doing that, Michael. We'll keep going.
Okay, thank you, Pam. So,
sure.
Pam, you'll be able to distribute the PowerPoint to people who are on the call as well as the recording, right?
Yes, absolutely.
Okay, great. So if you missed anything, we talked about the fact that there are limits on resources for certain programs, that this puts a limit on what people can save, but some types of resources don't count. The main one that we're looking at today, of course, is ABLE accounts. And a good chunk of money from an ABLE account will not count as a resource for SSI or Medi-Cal, and none of it will count as a resource for CalWORKs. Person with a disability, with a severe disability that began before age 26 can own an ABLE account. Anybody can contribute to it. There are limits, annual and lifetime limits on total contributions. Person with a disability owns the money in the account, and they control the money in the account if they're capable of managing the money. If they're not capable of managing the money, then another person can have what's known as signature authority to manage the money in the account, make withdrawals, decide which types of investments the money would go into. There are only 3 types of people who can have signature authority over the ABLE account owned by a person with a disability. That would be a parent if the account owner with a disability is a child under age 18. A legal guardian, that means they have to have been appointed the guardian by a court of an adult age 18 or older. Actually, it could be a legal guardian of a child if their parents don't have guardianship, or a person with power of attorney. So if the person with a disability signs over a power of attorney, which can generally be limited to just managing the money in an ABLE account, then the person with power of attorney would have that signature authority. So the big question is, well, now that you've saved this money, what can you do with it? Well, you can use it to pay for a wide variety of different kinds of expenses. Now, the expenses are called qualified disability expenses, which I think personally is an unfortunate term to use for the kinds of expenses that you can withdraw money from your ABLE account to pay for. Because when I hear the term qualified disability expenses, it makes me think, gee, that means I can only take money out to buy a wheelchair or pay for medical needs or assistive technology, or things that are directly related to my disability. But that's far from the case. A qualified disability expense is defined as any expense that helps a person maintain or improve their health, independence, or quality of life. And that includes all of the different kinds of expenses on this slide. So that would be education, housing, transportation, employment training and support, assistive technology, personal support services, health, prevention and wellness, financial management, and administrative services, legal fees, expenses for ABLE account oversight and monitoring. You could even pay somebody else to help you manage your ABLE account, funeral or burial expenses, and basic living expenses. They even left the option open in the ABLE Act, the federal law, by saying that other expenses might be allowable as well in the future if the IRS approves them.
Michael?
Yes,
sorry
Pam.
to interrupt you. Just might want to click that hide at the bottom of the screen under your presentation where it says, you just might want to click that.
Oh, no.
And that'll take it off
Okay.
your slide.
Now I've lost the PowerPoint. Let's see if I can get it back here. Oh boy. Okay, is it visible on the screen now?
There it is. Yep.
It
and
is.
are you
Okay.
able to click on that at that bottom, that bar?
You know, when I click
says,
on hide, Pam, it's not visible to me. Oh, okay. Now it looks like it's hidden.
Okay.
And the PowerPoint is still visible?
Yes, we see the PowerPoint.
Okay, great. Okay,
Thank
terrific. So let's go through a few exercises here where I'm going to suggest a type of expense a person might want to use their ABLE account to pay for. And if you can just type yes or no into the chat to indicate whether you think it would be allowable, that would be great. So the first one is rent and utilities. And I'm going to go back to the screen that shows what the types of qualified disability expenses are. So you can see if rent and utilities would be an allowable expense to use an ABLE account to pay for. And if you could just type yes or no into the chat, whether you think rent and utilities could be paid for through an ABLE account or not.
People are saying yes, those are living expenses. Yes.
Very good.
Yes.
They're living expenses, they're housing expenses, exactly. Very good. That's a yes. Next one, a computer to use for homework and video games. Again, we'll get back to the slide with all the allowable expenses. Computer used for homework and video games. Would that be a yes or a no?
People are saying yes, it's an education expense.
Exactly, it's education.
Yes,
it's not
homework. Yes.
It's not a problem that you're also using the computer for video games. As long as you're using it for education, it's justifiable. Great. Next one, gym membership. Going back again to the slide, gym membership.
Let's see what people think. People are saying yes, it's a health expense under wellness. Yes.
Exactly. Health, prevention, and wellness. Very good. Okay. Gambling. Gambling.
People are saying no, haha, no.
Correct. Even though I know some people who consider that a basic living expense, the IRS would not. Now, the ABLE program would not allow withdrawals for gambling. What about a bus pass? Bus pass, looking at the list.
People are saying yes for transportation.
Exactly,
Yes.
it's transportation. Very good. How about tax preparation? Tax preparation.
People are saying yes, yes.
Yes, financial management and administrative services. That would be under. Good. Christmas gifts. Christmas gifts. Buy for other people.
We've got some mixed answers here. Some yes, some no, question marks, no.
Okay.
Probably not.
Yes, the answer would be no. Doesn't fit in any of the qualified disability expense categories that are listed here. All right. So the one where we left off was attendant care. Would attendant care be allowed as a qualified disability expense?
Attendant care.
Mm-hmm.
Yes, people are saying yes, it's a personal support service.
Exactly. It's a personal support service. What about a vacation? Vacation.
Let's see, vacation. Could you use your ABLE funds for a vacation? Some people say yes, some people say no. There are some question marks.
Mm-hmm. And I would say all of those answers are correct. Vacations would be a maybe. I think it depends on whether you could justify the vacation as needed for one of these purposes. If it's an educational vacation, you could make the case that it would be an allowable expense. If it were essential for health, prevention, or wellness, you might be able to make the case. But a regular old vacation where you're just getting away, just for fun, don't particularly need it for a health issue or anything, probably not. But vacation could be a maybe, a yes or no, depending on the circumstances. Okay, paying a coworker for help on the job. About paying a coworker for help on the job.
Looks like people are saying yes, that is employment support.
Exactly.
Although, okay.
Exactly. Employment training or support would include paying a coworker for help on the job. Bribing an ABLE program to let you open an account even though your disability started after you turned 26. I'll assume everyone gets that one right.
Yeah, everyone's saying
Yeah.
no.
Okay. Yeah, that's obviously a no. Okay. So the big advantage to an ABLE account is that the money in it does not count as a resource up to certain limits and won't affect eligibility for benefits like SSI, Medi-Cal, or CalWORKS. Are there other benefits of an ABLE account? There are. First, you don't pay taxes on the contributions to your account from other people, as long as the contributions don't go over the annual or the lifetime limit. You don't pay taxes on any of the income that your account generates. So if your account gets interest or dividends and increases in value, you don't have to pay taxes on the increased value. That doesn't count as income. And you don't have to pay taxes on the money that you withdraw from your account, provided you use it to pay for the allowable expenses, the qualified disability expenses. So it's a nice advantage, kind of a nice tax shelter. Although the money that is contributed to an ABLE account is after-tax money. So if, let's say, your family wants to contribute money to your ABLE account, they would be declaring the money as taxable income and then contributing it to the ABLE account. It's not like certain retirement accounts where you get to deposit the money and not have that money taxed at the time that you're contributing it to your retirement fund. So ABLE account funds are only with after-tax money. Now, I mentioned that there are different options for how the money in an ABLE account is invested. From the ABLE account programs that I've seen, and there are over 40 of them, over 40 different states have ABLE account programs. There are usually a choice of at least maybe 4 to 6 different investment options. And a person can choose to put all of their money into one of those options, or they could mix and match. They could say, well, I'll put half of it here and a quarter of it there, and the remaining quarter in a different option. The options range from very conservative options that pay very low interest, like a bank account, to, on the other end of the scale, much more aggressive options that could have a big return on investment, could give you a lot of extra money, but would also have the risk of losing money, like stocks and bonds. And then there are more moderate options in between. The person gets to choose these, and usually at least once or twice a year, depending on the ABLE program, they can change their investment options. They can decide to move the money into different options if they like. So, believe it or not, a person in California can open their ABLE account in dozens of different states, because most states that have ABLE programs will allow people from any state to open an account with their state. And this is all done online, so you don't have to physically visit the state to open an account or do business with your account. If you'd like to see which other states offer ABLE accounts to people from other states, you can go to the ABLE National Resource Center at ablenrc.org. But there is a very compelling reason why a California resident would want to open their ABLE account in California. And the and California's ABLE program is called CalABLE, and the website is calable, CALABLE.ca.gov. And the big advantage is that when the account owner, the person with the disability, dies, the state will not take any money that's left in their ABLE account, with an exception that I'll get to in a moment. The problem is if a Californian opens their ABLE account in another state, then when they die, the state of California can claim all of the money that remains in that person's ABLE account up to the amount that was spent on that person by the Medi-Cal program after their ABLE account was opened. So for people who plan to save a significant amount of money in their ABLE accounts, and who don't know precisely when they're going to pass away, and don't know if they might have a lot of money left in their ABLE account when they die, this is a big advantage. It means that the money that remains in the ABLE account could be passed on to their heirs rather than to the state. Now the exception, and this is an exception that applies for anyone who has Medi-Cal benefits, whether or not they have an ABLE account, is if a person who gets Medi-Cal passes away, they're at least 55 years old, they leave behind an estate worth $150,000 or more. While they were alive, they received either nursing home care or home and community-based services, such as developmental disability services from one of the regional centers. And they're not survived by a spouse, a registered domestic partner, a child under age 21, or a child with a disability of any age. Then the state will put a claim on their estate and claim money to reimburse the Medi-Cal program. But that would be true for anyone on Medi-Cal who's age 55 or older, passes away, and meets all of these conditions. So, Pam, do we have any questions?
We don't, but if anybody would like to type a question in the chat box right now, we will be sure to get to it.
Okay.
Any questions so far? Anybody? Nope, not right now.
All right. So, so generally, California residents would have a very compelling incentive to open their ABLE accounts with the CalABLE, California's ABLE program, at calable.ca.gov.
Michael, would you be able to hide that bar at the bottom?
You know, I'm reluctant to do it, Pam, just because the last time I did it, twice I tried it, and then the PowerPoint was no longer visible.
Oh, that's when you got kicked off. Okay, so
yeah.
we'll live with it.
Yeah,
I had a question I wanted to pose, and I know that I get this. If an individual requires assistance to go through this process and open their ABLE account, can they have someone help them open an account?
Yes, absolutely. Another person can help them open their account, can help them make withdrawals, which are known as distributions from their account, can help them manage the money in the account. And generally that's a preferable way to do it, rather than the other person having legal authority to manage the account. It's preferable if the person with the disability can express preferences and participate in the management of their ABLE account. If another person could just help them rather than having signature authority and full authority over the account, that's generally going to be preferable. So yes, another person can help you open your account, decide how you want the money to be invested, help you make withdrawals or distributions, etc.
Great, thank you.
You're welcome. So ABLE accounts are opened online, and generally all of the transactions that a person makes involving their ABLE account will usually be done electronically as well, through electronic transfers. You can make contributions and generally distributions or withdrawals electronically. So another person who wants to contribute from their bank account into your ABLE account could do that through an electronic transfer. Now, the withdrawals or distributions are generally done electronically as well, and in many states they offer a debit card option, and the California ABLE program, CalABLE, just recently started offering a debit card option. It's a prepaid Visa debit card, which can make it a bit more convenient to spend the money from your ABLE account. I should mention that it's up to the person with the disability or the person with signature authority, if that's not the person with the disability, to keep track of the withdrawals, the distributions, and to note what the purposes were for each distribution or withdrawal. Keep receipts, etc., as documentation of what the money was used to pay for. Now, people ask me all the time, well, if I keep this stuff, am I ever going to have to submit this proof of my of the fact that my withdrawals, my distributions were used for allowable purposes? And the answer is, you would be required to provide that evidence if your account were ever audited. The IRS is responsible for overall management at the federal level of ABLE account programs and individual ABLE accounts. Now, I don't want to give people the impression that the IRS is never going to audit anyone's ABLE account. I don't know if that's the case. But I would speculate, and this is just speculation on my part, that it's probably highly unlikely, because the IRS is grossly underfunded to handle all the duties they've got involving income tax. And it's just not that likely that they're going to have much time to devote agents' time to auditing ABLE accounts. But it is possible a person's ABLE account could be audited, and if it were, they would want to have evidence of what they used each withdrawal, each distribution to pay for, and proof of that payment. So, are there any fees involved with ABLE accounts? Yes, there are, and this is true for every ABLE program that I know of, including California's. Specifically, the CalABLE program charges an annual fee of $37. They also choose an asset-based fee. In other words, they're charging a fee. It's generally a limited fraction of 1% on the balance of the funds in the ABLE account, depending on which investment option you choose. And if you go to calable.ca.gov, you can look at what the fees are depending on the investment option you choose, or investment options. and there's a state administrative fee as well. Then finally, there are some fees that only apply if you're not using the online features. Like if you want to get paper statements rather than just get your statements of your Able account balance and transactions online, they'll charge you a fee for things like paper statements. And I believe that if you want to have, if you want to withdraw money rather than electronically, if you want to have the program cut you a check, I believe that there's a fee for that as well. I know that's true in a lot of other states' Able programs. So there are some fees involved, but they tend to be pretty limited. So suppose you're just overwhelmed. You don't know which investment options to use. You're not sure you really understand Able accounts well enough to make decisions about them. You would like maybe some advice about managing your finances generally, and including Able accounts as one component of your overall financial planning. Can you get any help with this? Yes, you can. And in fact, if you're in California, you're in luck, because you're in the only state that has a program that actually helps people with Able accounts. The program is called, the project is called Achievable Corner. It's operated by the National Disability Institute, which is a highly regarded, nationally known organization, in partnership with CalAble, the California Able program. And Achievable Corner can help people. Their website is shown on this slide, National Disability Institute, all spelled out, .org/achievable-corner. And this site offers lots of information, including how to choose which investment option or options you'd like to use for your Able account, and how to plan your finances beyond just your Able account.
Michael, I'm not seeing your presentation right now. I don't know if anyone else is having the same issue.
Oh, boy. Well, Pam, I have just reached the final slide, which is just says questions. So rather than trying to present this again, I think I'll just go ahead and open it up to questions.
Okay, sounds good. And I'm just responding in the chat box. Someone was asking about the PowerPoint, and yes, we can certainly distribute the PowerPoint after this webinar today, and we will also post the recorded webinar on our project webpage. So we'll be sure to get that to everybody. So I guess now we'll open this up to questions. Any questions that anyone would like to ask, feel free to type it into the chat box. I'll keep my eye on it.
But while people are doing that, I wanted to mention one or two other things, just to buy some time while you're thinking of your questions to type. I had mentioned that there is still a role for special needs trusts, despite the fact that people can have Able accounts as well. And there are many people who have both a special needs trust and an Able account at the same time. Now, advantages of Able accounts are that the person with a disability owns the money. They can control the money, in contrast to special needs trusts, where neither of those is the case. The person with a disability doesn't technically own the money, and they can't withdraw the money or control how it's used. Only another party, named as the trustee, can manage the money in a special needs trust, although the money can only be used to benefit the person with the disability. Another advantage of Able accounts is that the money is not taxed once it's deposited into a person's Able account. The money that's deposited into special needs trusts is subject to a pretty significant amount of tax. But here's an advantage to a special needs trust over an ABLE account. A special needs trust has no limit on contributions. And you remember there was a limit, both an annual and a lifetime limit on contributions to ABLE accounts. We'd said the usual annual limit for total contributions to a person's ABLE account is $15,000. But if that limit is reached and the person with a disability who owns the account is working for pay, either employed or self-employed, they can then contribute more than the $15,000 limit, so long as the extra contributions come only from their earnings, their wages or self-employment income, and not from any other source. And then the limit would be an extra $12,760. So at most, a person's ABLE account can receive total contributions in a year of a bit over $27,000. Now, that's not going to help you if your grandmother is writing up her will and she wants to leave you, say, $250,000 in her will, but she doesn't want that money to jeopardize your SSI, your Medi-Cal, or other benefits. What she can do is she can write her will so that the money doesn't go from her will, from her estate, to the person with a disability, to her grandchild. Rather, the money goes into the special needs trust. And then it would not count as a resource, wouldn't count against those resource limits. So
Michael, we have a couple of questions.
Sure. Hang on just one moment. I'm just going to finish the thought, and then I'll pick up on those.
Oh, sure.
So if Grandma wants to leave $250,000 to her granddaughter, an ABLE account isn't going to help because she can only contribute $15,000 at a time. But that's where a special needs trust would come in handy. Okay. Thanks, Pam, for being patient.
Sure, yeah. Sorry to interrupt your thought there.
No problem.
Okay, so the first question, when would you advise a special needs trust instead of or in addition to an ABLE account? This would be for a person with a disability who might not be capable of managing their own finances.
Yes, for a person with a disability who's not capable of managing their own finances, they could use either an ABLE account or a special needs trust or both. And which one they would choose or whether they'd choose both would depend on their circumstances. So in the example I just used, if, say, a relative wants to bequeath you money in their will, and it's a substantial amount of money, much more than $15,000, a special needs trust would be the logical option because that money couldn't be left to an ABLE account, since an ABLE account can only receive $15,000 in any given year, although it can be more if the person with a disability is contributing their earnings. So that would be an example of when to use a special needs trust. Or if, let's say, the person with a disability gets some big lump sum, maybe they had an accident and there was an insurance claim and they got a big payout, or maybe a settlement of a lawsuit involving the injury that caused their disability. And that money would be substantially more than $15,000, a special needs trust would be a good option then. But it's going to cost usually, in my experience, at least maybe $5,000 to create a special needs trust for that person. An alternative is something called a pooled trust. There are nonprofit organizations that create these sort of group special needs trusts. So they do the upfront legal work to create the trust. And what individual people with disabilities do, or their families, is open accounts with that group trust known as a pooled trust. But there's still fees involved in the account management. The nonprofit handles the account management and they get fees each year for doing that. Now, an ABLE account would be useful if a person wanted to own the account themselves, manage the money, or have a person with signature authority manage the money on their behalf. And they don't expect a ton of money to go into that account. So the $15,000 a year usual limit and the over $500,000 lifetime limit on contributions wouldn't be a problem for this person. They would probably be fine with just having an ABLE account and not a special needs trust, which means they wouldn't have to spend thousands of dollars to get an account created. So, but then there are examples of when a person would want to have both an ABLE account and a special needs trust. So let's say the person wants an ABLE account to be able to save money and receive relatively limited contributions from other people. They probably want to choose an ABLE account for that. But if they're expecting a big accident settlement, or if a family member wants to leave them money from their will, through their will, they might want to have a special needs trust for that. And as I mentioned, there are many people who have both ABLE accounts and special needs trusts if both of those kinds of circumstances apply to them. Okay, and was there another question, Pam?
Yes, there was. And I just wanted to mention that there are a number of resources in Los Angeles and Orange counties for families and individuals. And we can certainly, if we don't have that information on our webpage, we can certainly get that out. Some organizations that help with pooled special needs trusts or with, navigating the ABLE system. So we can certainly get that out to folks because there are a number of nonprofit agencies who are focused on that kind of support. So the next question, let's see, it looks like if someone opened their ABLE account in Virginia because the California accounts were not available yet, as a California resident, is it okay to leave it in Virginia and still have the California lifetime limit of $529,000?
Okay, that's an excellent question.
Yeah, good question.
Yeah, there are lots of details about ABLE accounts that I haven't included in this because I wanted to keep it fairly simple. But that's an important issue. First off, a person can only own one ABLE account. However, if they decide they'd rather switch states, they'd rather move their account from, let's say, Virginia to California, they can do that. What they'd have to do is open their account, their ABLE account in California, and within 60 days, they'd have to close out the ABLE account in Virginia. And a person in California who has a Virginia ABLE account might very well choose to switch to a California ABLE account, a CalABLE account, so that there wouldn't be that penalty if there are funds left in their ABLE account when they die, so that the state of California wouldn't claim the balance of the funds to reimburse for the expenses that Medi-Cal paid for that person while they were alive after their account was open. So that might be a compelling reason to move the account from Virginia to California. Now, if a Californian opens an account in Virginia with Virginia's program and keeps it there, they would be subject to the lifetime contribution limit for Virginia's program. I don't know what that is offhand, but if you go into the ABLE National Resource Center website, the ablenrc.org site, you can click on Virginia and find what the lifetime contribution limit is for Virginia's program. So that's an important point, that just because you live in California doesn't mean you'll be able to enjoy the over $500,000 lifetime contribution limit for California unless your ABLE account is held within California with the CalABLE program. And I don't know what Virginia's limit is, but I'll bet if anything it's less than the lifetime limit for California. But the big advantage to having your account in California rather than Virginia, if you live in California, is what happens when you die. If there's any money left in the account, it's not going to be subject to seizure by the state if you're a California resident and have a California account. So what would you do in that case? If you live in California, you have your Virginia ABLE account, and you decide, I'd rather have my account in California, you would contact the CalABLE program and arrange to open an account there, and then you would close out your account in Virginia by transferring the money, that's called a rollover, from the Virginia account into the California account. And those big transfers or rollovers, if you're closing out one ABLE account and opening another, even if the balance in your Virginia account were well over $15,000, you'd be able to roll over or transfer the full amount without a problem. Another detail I hadn't mentioned is college savings plans. These are known as 529 plans. These are accounts that exist in every state that I know of, that are ways generally for parents or other family members to save money for their children's future college expenses, and there are tax advantages to those accounts. But one question that's been asked many times, or was asked many times after the ABLE Act passed, was, well, suppose a family had one of those college savings plans for their child, and then it turned out the child had a disability that made it highly unlikely that they would go to college. Could the money in that college savings plan, that 529 plan, be transferred or rolled over into an ABLE account instead, so that the person with the disability could use it for other purposes besides college? Now, when the ABLE Act first passed, the answer was no. The Act did not allow that kind of transfer. But in 2018, the tax overhaul that Congress completed did include a provision that enables people to have money transferred from a college savings plan, a 529 plan, into an ABLE account. The only catch is the transfers are limited to the usual $15,000 a year. In other words, the transfers from the college savings plan into the ABLE account must still satisfy the $15,000 a year contribution limit on total contributions to an ABLE account. But it's better than nothing. Okay, any other questions at the moment, Pam?
Thank you, Michael.
Sure.
Not at the moment, but something that I wanted to mention is just that,
Sure.
I really encourage people to get information out about the ABLE accounts and the benefit to individuals with disabilities. This is a huge game changer for people who receive SSI benefits. We've never seen anything like this. And prior to the ABLE, laws, there was really no incentive for someone receiving SSI to get a higher education, to get a higher paying job, because people are always so worried about that $2,000 resource limit. And we've seen, if you've worked in the field for a while and you've supported individuals, they get toward that $2,000 limit and people are scrambling to do a spend down and purchase things that maybe the person doesn't need at that time. And it just really is so counterintuitive and demotivating. So, now there are all these possibilities for someone with developmental disability or other disability who qualifies for an ABLE account to really utilize this resource. And I know that when the ABLE accounts first started to come out, people were a little worried about the fees and some of the limits and the process, but I'm a firm believer that the positives outweigh some of those details. And as long as individuals have the support and the resources, and there are lots of different agencies like the ABLE Resource Center, CalABLE, the State Council is doing a lot of wonderful work around ABLE, and they will actually come out and do presentations, and they have a lot of resource materials. We are also providing materials through this project. So I encourage anyone who is working with individuals who are receiving the SSI benefit and eligible for an ABLE account to definitely take advantage of this really wonderful resource.
Very eloquently stated, Pam. Thank you very much. I completely agree. And I did want to mention that in my 30-year career doing benefits work, I have seen many, many instances in which a person's bank account or some other asset or resource inadvertently ended up going over $2,000, and they didn't even realize it for a time. And so long as they're so-called countable resources or assets that do count against those limits, so long as they remain at or above that $2,000 limit for SSI and the Medi-Cal that comes along with it, the person would not be eligible for any benefit, and that can cause them to have substantial overpayments, meaning that they would, if they continued to receive benefits that they weren't eligible for, they'd eventually have to pay them back. And Pam, you mentioned that oftentimes when people do keep track of their bank balances and see that the balance is getting dangerously close to $2,000, they have to run out and spend money, and it's a constant vigilance game where people are trying to avoid losing benefits. If they use an ABLE account as their primary savings vehicle, and maybe just have a regular bank account for receiving deposit of their SSI or Social Security disability payments, or just incidental purchases for things like gambling and bribes that aren't allowed by ABLE accounts, then they can be sure to keep the balances in their regular bank accounts way below the limits and not have to worry about being so vigilant all the time.
Yeah, absolutely. And I like to give people some basic examples, like say you are an individual with a disability who qualifies for an ABLE account, and as a result of your disability, you have a diagnosis or condition that requires regular massages or some other type of therapy or something like that, wellness. That's something that would be a qualified disability expense under ABLE. We talked about the question about vacations and how that can get a little gray.
Right.
Say you are an individual with Down syndrome and you are part of the National Down Syndrome Association and your conference is in Orlando, Florida, and you might need support or assistance from an advocate or a direct support professional to help you attend that conference that might be maybe at Disney. It just happens to be at Disney World. That's something that would potentially be a qualified disability expense if it is tied back specifically to the individual's disability. So I really want people to understand that there are a multitude of different options. We talked about some of the technology and assistive technology that people can purchase, acquire, that is a qualified disability expense. So I really want people to understand that there are a lot of possibilities for people to, when they utilize their ABLE account. And I know sometimes people ask about how do people make purchases and things like that. I believe the way that California is doing it is with some type of debit card. I'm not 100%
That's
clear on
correct.
that. Michael, do you know?
Yeah,
okay, it's like a debit card that you use. Okay.
CalAble recently started offering prepaid Visa debit cards to people with ABLE accounts. So it makes it a whole lot easier to spend the money.
Michael, we have another question here.
Great.
Someone who said if she sets up an ABLE account for her son with special needs who is not able to manage his own finances, and if she gives herself signature authority, can she add that into her will that upon her passing, someone would be authorized to take over the signature authority?
Well, I don't believe it's something that you could put in your will. I want to kind of revisit who are the three types of people who can have signature authority. In other words, authority to manage the money in another person's ABLE account. It would be a parent of a minor child, a child under age 18, or a court-appointed legal guardian of a person with a disability, whether an adult or a child, or a person who's been given power of attorney by the person with a disability. And that power of attorney, generally, I haven't looked at California's power of attorney law, but generally, a power of attorney can be very limited. And I believe it can generally be written up in such a way that the power of attorney could be just to have signature authority for the ABLE account and nothing else. So it would be, a pretty non-restrictive limitation to put on the rights of the person with the disability. Now, if you have signature authority for your son's or daughter's ABLE account, and you'd like to be sure that somebody else will be able to take over that responsibility when you pass away, I would say that the best option would probably be to have your son or daughter who owns the account sign a power of attorney allowing another person to have signature authority over the ABLE account at the time when you are no longer able to do that. Obviously, you'd want to have them sign the power of attorney in advance, but I believe powers of attorney can generally be written in such a way that they're conditional, so that it would be conditional on your not being available for whatever reason, death or another reason, to continue to manage the ABLE account. So I don't believe it's something you'd put in a will, but rather in a power of attorney that your son or your daughter would sign.
So the person who asked this question is asking if this individual is conserved by several people, could they have any one of those several people have signature authority and not just the parent? And she said her son is not able to give permission. He's conserved.
Yeah, that That unfortunately is a bit of a catch-22 in the ABLE Act, is that only those three parties can have signature authority. And I've had people ask me this before: what if you're an adult, you don't have a court-appointed legal guardian, and you're not capable of signing a power of attorney? You just don't have the ability to understand and sign and authorize that. Unfortunately, I don't know that there's any alternative, but each state is looking at these issues. They're sharing resources and trading notes, but each state has a separate ABLE program. There are over 40 states with ABLE programs. And what I would recommend you do is contact the Cal ABLE program and ask them what their experience has been in that situation to see if they've found a way around it. But unfortunately, for an adult, the person with signature authority either has to have court-appointed legal guardianship, or they have to have power of attorney authorized and signed by the person with a disability. So that may not be possible. I'm sorry I don't have a more positive answer to your question, but I would definitely contact the Cal ABLE program and ask them.
Michael, we have another question. Someone asking, what are the tax filing requirements for ABLE accounts each year?
It's a good question, and I'm not certain. Nobody's asked me that before. I would also ask the Cal ABLE program that question. They should be able to answer it. Any other questions at the moment? Pam, there's another topic I wanted to mention, a great little loophole that you can use ABLE accounts for if you get SSI.
No other questions right now.
Nothing right now. Okay. A perennial question that I get from families who have family members who get SSI, this comes up all the time, is, well, can I help my family member who gets SSI? Can I help them out with living expenses, with food, with rent, with utilities, etc.? And if the person gets SSI, there are definite disadvantages to contributing toward that person's food or shelter costs most possible ways. But there's an exception for ABLE accounts. So I'm going to go through them in order here. Suppose your child has SSI, is 18 or older, is an adult, and they're receiving the maximum amount of SSI, which in California is over $900 a month. In order to be eligible for the maximum SSI, the individual needs to be paying their own share of food and shelter costs. So since the purpose of SSI is primarily to pay for food and shelter, there's a logic to this. So if you get SSI and you use it to pay for your own food and shelter, then you can receive up to the maximum SSI, assuming you don't have other income that might reduce it. Now, if another person gives you cash to help you pay for food and shelter, that cash will reduce your SSI almost dollar for dollar. So it would completely defeat the purpose of giving the person that supplement, that extra cash, to pay for food or shelter, because it would reduce their SSI almost dollar for dollar. So you don't want to give the person cash to help them pay for food and shelter. What if you pay for their food or shelter directly rather than giving them cash? You go out and you buy groceries for them. You pay their rent. You pay their rent to their landlord. You pay their electric bill, whatever it might be. If you pay for food or shelter directly, rather than giving the person on SSI cash to do it themselves, that will not reduce their SSI dollar for dollar, but it will reduce their SSI by up to 1/3. That means they can lose over $300 a month of their SSI. So that's probably not a good option either. What if a special needs trust is used to pay for a person's food and shelter? Well, you still have that same catch-22. If a special needs trust paid directly for a person's food or shelter costs, their SSI would still be reduced by up to 1/3, over $300 a month. But what if money in the person's ABLE account is used to pay for their food or shelter or both? That's the loophole. If money is taken out of an ABLE account and it's used to pay for food or shelter or both for the person with a disability who gets SSI, their SSI will not be reduced. And I've even heard of examples where a person had a special needs trust and an ABLE account. The trustee for the special needs trust took money out of the trust and deposited it into the person's ABLE account. Remember, contributions to an ABLE account can come from anywhere. And then the person with the disability or the person with power, with signature authority for them, took the money out of the ABLE account and used it to pay for food or shelter or both. In that fashion, there was no reduction in their SSI. So it's kind of a nice little loophole for people who get SSI who have someone else or a special needs trust that would like to supplement their income to help them pay for food or shelter or both. Okay.
Thank you, Michael.
Thank you, Pam. Any final questions?
I don't see any other questions, but I did want to make we do have a question.
Okay, great.
Someone is asking, relating to that loophole that you just mentioned, what if the person with a disability lives with the person who is assisting them, who is helping them? So would they be paying themselves? Does it still work that way?
Yeah, it's interesting. This is really like a bookkeeping gimmick when you think about it. So if, let's say, the person with a disability.
Oh, Michael,
yes.
Sorry to interrupt you. They just clarified, for example, this person is saying, my 20-year-old son lives with us and he receives SSI. How does he receive the maximum SSI benefit?
Okay. Generally, your son would need to be paying his share of food and shelter costs in your household out of his own income to qualify for the maximum SSI benefit, which is $938 and change per month. And there are two ways to do that. You can either say that your son is living with your family and your family is a family economic unit. You combine income and pay for expenses in common, and then your son would have to pay his share. So if there were 3 of you living in the home, you'd have to figure out the total food and shelter costs for the whole household. Then you'd figure out what 1/3 of that would be, and that would be the portion that your son would have to pay to qualify for the maximum SSI. An alternative would be for you to say your son is an adult He's a separate economic unit. He's responsible for his own expenses, and you're charging him for room and board in much the same way that you would a boarder, someone who you took in was just paying for room and board. And Social Security will ask you, well, how much are you charging your son? And how much would you charge an unrelated boarder for the same room and board? And if you tell them it's the same amount, and it's a reasonable amount, it's not ridiculously low so that they would question it, then your son would qualify for up to the maximum SSI. He would still have to pay you. You'd want to provide receipts. You'd want to have a paper trail. But suppose you wanted to help him out and supplement his income to help him pay for food or shelter. If you took some money and deposited it into his ABLE account, and he used money from his ABLE account to pay for some of his food and shelter costs, that would not cause his SSI to be reduced. So in that way, you could be essentially paying yourself, just as you interestingly interestingly worded it. But as long as you had the paper trail that showed you made the deposit to his ABLE account, the money was then taken out of the ABLE account and used to pay for food or shelter. First of all, food and shelter, ordinary living expenses, housing, those are all allowable expenses for an ABLE account to be used to pay for. And so long as you had a record of all the transactions, everything would be above board and there would be no impact on his SSI, which is really kind of neat. It's nice to see loopholes that are used by people who really need loopholes and not billionaires.
Michael, regarding that, we had a question. Is this type of quote unquote loophole arrangement described in a book, publication, or a website anywhere that can be referenced?
Well, it's not explained in as much detail as I just gave you, but it is found in Social Security's policy manual. It's called the Program Operation Manual System, POMS, or POMS for short, and it explains how this works for SSI. Also, the ABLE National Resource Center has a series of archived webinars, and at least one of them, and probably several, reference this loophole. I couldn't tell you the titles off the top of my head, but if you're interested in getting more information about that loophole, and particularly if you'd like to see it in black and white in Social Security's own rules, then what I would ask is that you email Pam, let her know that you'd like this information. She'll let me know, and I'll pass the information along to her so she can distribute it to anyone who's interested.
And I'm just typing my email in the chat box in case anybody needs it. And I did type in there the National ABLE Resource and the CalABLE web pages, but I know you also had that in your presentation. We have a question. Do banks and financial institutions offer ABLE accounts along with checking accounts?
Oh, very good question. No, unfortunately, you don't have a choice of which financial institution in your state you can go to open an ABLE account. You have to go with the one and only ABLE program in the state. And CalABLE is, like most states, overseen by the state treasurer, the state treasurer's office. In some states, it's a different entity, but it's usually a state government agency working in partnership with a financial institution that, that handles the investments of the money in ABLE accounts. So no, you can't just go to your corner Bank of America and open an ABLE account. You'd have to contact the ABLE account program. And in California, of course, it's CalABLE. Good question.
Thank you. So question, what are lesser known drawbacks of an ABLE account versus a trusted family member or a special needs trust?
Well, the downside to an ABLE account compared to a special needs trust is that there's the contribution limit with an ABLE account. Generally, if you want to, give money to your child's ABLE account or family member's ABLE account, you're not going to be able to deposit more than $15,000 a year. Whereas with a special needs trust, it can be any amount. So it's a much better vehicle. A special needs trust is a much better vehicle for leaving substantial amounts of money in person, to a person through your will, for example. Now, compared to a trusted family member, well, I think that if you have a family member who's just sort of informally guarding money that's meant for your benefit, and they're distributing it to you as needed, that really makes the person with a disability far less independent and far more dependent on that family member for their money. And of course, if anything ever happened to that family member, if they were, suddenly killed in an accident, that could create major problems, especially if there wasn't another trusted family member ready to step in immediately. So I do see downsides to not having any legal authority that establishes that money is to be used only for the benefit of the person with a disability and sets up the mechanism to do that, like an ABLE account or a special needs trust. But I think ABLE accounts can do a lot. Now, one downside to ABLE accounts that has been revealed to me recently is that sometimes when you request a distribution, a withdrawal from your account, it can take a while. It can, if you try to withdraw from your bank account, you can do it instantaneously. But when you request a withdrawal from your ABLE account, it can take days, sometimes several weeks, from what I've heard. So it's not for something. It's not to be used when you may need to be able to make an immediate withdrawal for some immediate need. But the ABLE program you select, most likely CalABLE, should be able to tell you when you ask them how long it'll take for the money to be available when you request a withdrawal.
Thank you, Michael. We have another question.
Okay.
If a child with a disability is conserved, does the conservator open the account in the child's name or in the conservator's name?
It would have to be in the child's name. Now, I do want to stress that a conservator whose sole relationship to the person with the disability is that they are the conservator cannot have signature authority over an ABLE account unless they are either the parent of the minor child, or they have court-appointed legal guardianship of the person with the disability, or they have a power of attorney signed by the person with the disability. So conservators can do a lot, but they cannot have signature authority over an ABLE account unless they are one of those other three kinds of people.
Thank you, Michael. I know we have a few more minutes. I was hoping to share the project webpage. So let me see if I can share my screen here. Hopefully everybody can see the Easter Seals page here. So you can go to our Easter Seals Southern California website and look under our programs under work. And we have our Veterans Program, our Workforce Employment Services, and then the Transition Project. So if you go to that page, it will bring up all of the resources that we have as the result of this project. Lots of different information and resources here. And this is available to anyone wanting to access it. We wanted to leave it open. And if you are looking for the webinars and the calendar of what we have going on this year, you can just click on calendar and training webinars, and it will pull up this page. And we have our webinars that have been recorded here that you can access and play as needed. We will have our April and the following months here as well for access. And I did want to just make a plug for the individual financial literacy consultations that we have available through the project. We're very fortunate that as a result of the project, we're able to engage in individual financial literacy consultation for individuals and families. We are looking for students with disabilities between the ages of 14 to 25 and their families residing in Orange County for a 1-hour individual consultation at no cost to the student or the family. It is funded through our project. We are specifically looking for case studies to be used in webinar and in training materials moving forward. Student between the ages of 18 to 22, student in their last 1 to 3 years of school, so currently attending school, a student receiving Medi-Cal and SSI, the family could be receiving other benefits such as CalFresh and CalWorks, and the student could be either working part-time or considering employment. So those are the folks we're looking for a case study. However, students with disabilities between the ages of 14 to 25 and their families are eligible for these 1-hour individual consultations at no cost. So I'm hoping that people will take us up on this offer. I will be sending out another blast for this this week. Feel free to email me directly. I've already had a couple of requests coming in. I know that we have some folks on the webinar today who are either with the school district, parents, or working with students in this age group. So I encourage you to please take advantage of this resource. It's available. And I also wanted to mention that our next webinar is Tuesday, May 19th from 10 a.m. to 12 p.m. We will have Michael with us again to present, and the topic is Affordable Futures, Planning for Independent Living Within a Youth Budget. And we are looking for individuals to volunteer. Any of the consultations that we use for case study, we will change the names and any identifiers so it is confidential, so that we can use it in the context of our presentation. So if people could please help get the word out about that, we would appreciate it. And if there are no other questions, we've got a couple minutes left. I don't know if Michael, you wanted to mention anything else?
No, I think you've covered it all very effectively, Pam. Thanks so much. And if there are no further questions, I actually have an appointment in 2 minutes to call my 27-year-old daughter who still likes ice cream.
Oh, thank you everybody for joining us today and for your patience sticking with us through our technical issues. We're really happy to have everyone on the call, and we look forward to seeing everybody next month. And feel free to email me, reach out to me. I can also get questions to Michael. I did type Michael's email in the chat box so that those of you who wanted to reach out to him directly have a way to contact him. Thank you, everyone. Have a wonderful day and stay safe.